Hello and welcome to Profiles in Risk. This is your host, Tony Canyon, switching to my radio voice. Today I have with me Will Betteridge, founder and CEO at PIR. Will, how's it going today?
Doing pretty well. I don't have the radio voice, so I'll try to work on that for you. Yeah.
All right. And it looks like you're in Delaware, and we're recording October 30th, just before Halloween. So Delaware, I'm guessing, starting to get cold, but not yet ugly.
Yeah, starting to get cold. Yeah, we're actually in Delaware, not just incorporated here. Although everyone's incorporated like on the same street we are. Um, so, yeah, so it's starting to get cold here, kind of like on the edge, but cold's also all relative, right? So.
You bring up a really good point. I always kind of assumed that Delaware is little more than like a PO box, where every corporation is incorporated.
Yeah,
Uh,
yeah, exactly.
all right, so we will always give the guest a chance to give the elevator pitch. What is fair?
Yeah, so Fair is an auto warranty provider. We're 100% API based, and the way you can think about us is the same as a carrier. So we write on our own paper. We do everything from end to end. And why we do that is we deliver a better customer experience and something that brands can actually trust within their distribution. Yeah. So it's kind of a black box industry. So it's been a wild ride. First going from what I was doing before, doing self-driving cars before this, and then getting into this exciting world of auto warranties.
Yeah, so the warranty side is
Yeah,
a really weird side of insurance, a really kind of exotic side of insurance. And most people's exposure to and I know very little about it, right? But the most people's
yeah.
exposure to the warranty side is you go buy a car and the dealer spends more time trying to push a warranty on you than they do selling you the car, uh,
Hmm.
leaving you with a really bad taste in your mouth. Uh,
Yeah,
and then you get the incessant letters or calls
yeah.
that your warranty is expiring and you should buy a new one.
I
Uh,
actually just got one of those letters yesterday. In the mail. So I've started collecting these and putting them up in the office. Yeah,
uh-huh.
yeah,
Oh,
yeah.
makes sense. Makes sense.
Yeah.
So why go up to the warranty side? Um,
Yeah. So I would say like the first fundamental premise is like so we don't do have a sales team, no one calls customers directly, and then we have no sort of like mailers. So we do get away from those predatory sales tactics. Instead, we use our B2B partners to help elevate our own brand and service distribution, kind of own that client relationship for the sales cycle, right? So we exist outside of the dealership or traditional routes primarily. But actually, how I landed in this sector is probably one of the nerdiest ways to start into a company. I landed into it from a hobby of reading 10K statements.
uh-huh.
So I got back in 2020, I went back to school for a master's in finance, picked up this hobby, and there's a company called Carvana. I don't know how much you know about them, but I got really hooked on their 10Ks for them over the years. And they had a line item for vehicle service contracts, also known as auto warranties. And at that time, I think they were doing like $130 million a year. And I just went, what the hell is this? I mean, I don't know how much I can curse here, but anyways, it was a little bit more prolific in language. But and in the footnote said that they were doing 100% gross margin, right? So got super interested into it. I
Hold on. I've got an MBA
Yeah,
too. It's been a while. 100% gross margin, basically 130 million vehicle service contracts, and we're spending nothing on it,
yeah. So the dealer average markup on this is about like 300 to 400%, and
which is
that's where yeah,
they working so
exactly.
hard on them. Yeah.
Yeah, so most dealers actually make more off the F&I department than they do the vehicle themselves, and a large portion of that actually comes from the warranty product. Um, Yeah, it's absolutely ridiculous. And it's challenging, right? Because it's a high pressure situation, but in the relative scheme, right, it doesn't seem like a lot to the consumer at that time because they go, oh, it's another like $20 a month spread out over like 84 months now since people are doing longer loans on
Mhm.
cars. Yeah. So yeah, it is definitely an interesting space. And I tried finding information online. So like Gallagher has BIS reports, couldn't find anything there. I tried reaching out to people on LinkedIn to learn more, and like no one would really talk to me. So it's like either things are so good no one wants to talk, or they're so bad no one wants to talk. Um, and I'm the type of person that when I get fixated on something, I have to see it through. So I started flying to warranty conferences and my wife thought I was nuts at the time too. And I followed the industry for about 3.5, 4 years. Yeah, and I finished another degree over in London for an EMBA, and I decided, look, I see the market opportunity, I see the market timing as well as the product opportunity, and got our team together and went all in.
Yeah, so basically, so you end up with like one and a half MBAs, right? An MBA and an executive MBA. Uh,
Yeah.
Obsessed with the warranty space, and you're like, this looks like an amazing business, and the way it's ran and sold is horrific. There has to
Yeah,
be a better way to do this.
so I think that's part of it, right? It's like, so my background's always been the last decade of my life has been building industry-leading startups. So did that for Uber Eats, did that for Instacart, ran risk for TikTok for North America, head of ops for Cruise, GM doing self-driving cars. And like through that, you become a little bit of a masochist. You have to love the problems, right? And you have to love the pain of growing through those things. And this industry is like one of those things where it's just rife with issues, right? And you see it from the tech side, you see it from customer service, you see it from the operational side, inefficiencies, distribution, right? And I always knew like wanting to start a company, and like I wanted a company that was boring. People never really thought about, like probably never think about auto warranties, right? Unless you're being sold or getting that mailer. And something that has like margins that are attractive, right? To be able to work with and be able to grow a company off of.
Okay.
Yeah.
No, I just noticed on LinkedIn that undergrad you have a philosophy major. So
Yep.
nothing with the startup world that a philosophy major.
You also, it's not on there, but I also have 3 years in fine art photography and graphic design as well, but didn't finish that degree. Yeah.
All right. Addiction to education,
Yeah.
which is nice. All right. So I'm guessing the name Fair
Mhm.
tells the story. So why is Fair a better way to do warranty? Why is it fair?
Yeah. So the first part really comes back into that value proposition to the consumer, right? It's a no pressure situation where we actually provide people either with a monthly quote or the term payment quote. So when they go to the dealer, they can actually say, look, this is what the price that I have for the same exact coverage. And there's a lot of junk coverages out there. And we can talk about like what a junk coverage is for an auto warranty for consumer education. But there's no pressure, right? So if the dealer wants to lower their costs and actually match what fair market value should be, they can do that. Or if they want to go for us, like we're there as a resource, but we're there to empower the buyer, right? So that's the one part. The other side to it is just a better customer experience, right? So there's certain providers that are out there. I just won't name names, but if you want to cancel a contract, you've got to physically print out a piece of paper, go to a notary, get it signed, mail it in, pay a cancellation fee.
Notarize it.
Yeah. So like it's just like this is not the experience that digital natives or tech suppliers expect or anyone expects as a consumer today, right?
You have to notarize it. I'm still stuck on that. Okay.
Yeah.
Uh,
Yeah.
the coverages are good. Is this
Yeah.
side because the majority of insurance is heavily regulated, and that forces us to a lot of standardization and keeps us honest, really. Uh,
Yeah.
is is the warranty side unregulated?
So in majority of states in the US, there's little to no regulation. So like Pennsylvania, Delaware here locally, there's nothing at all. You don't even have to have a contract approved. Nothing has the premium reserves don't have to be held, et cetera. So it's kind of a scary place, right? Unless you're talking about with the loan, right? So if you sell at the dealership, it seems an asset on the loan, and that's another niche to it. But yeah, I mean, like even in California, if you, it's called mechanical breakdown insurance, so you have to do rate filings out there. But the license is approved by the Department of Health.
But
So, so it's things are all over the place. Yeah, yeah.
okay, okay. So 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 you built a better warranty basically, uh,
Mhm.
and largely distribute through B2B relationships, which in our world, I'm guessing insurance brokers. Do you go to the brokerage agency and broker channel?
Yeah, so broker channels, we typically look for like high tech partners to be able to
Yeah.
distribute through. It's people that are used to some of the technology. We integrate with like their CRM systems that are there on the back end. So like we don't require any input from users. So if you already have an auto policy, we can just generate the quick quote to be like an automated solution. We can automatically co-market book and bind, right? So like agencies don't have to do anything; they just get paid off pre-existing book of business. We have quite a few different ways of working with them.
I think that's where it gets really, really interesting from the perspective of my listeners half of whom are insurance agents and brokers. Um, because it's a product that's good for the client, priced fairly when normally it's not priced fairly.
Yeah,
Um, and I don't have to remember to offer it. I don't have to um it doesn't have to add to the long list of things that I already need to discuss with the
yeah,
client. Basically, you guys can automate it to the point where if we wrote the auto policy, the offer gets made, and I still get paid if it gets
yep,
written, and
exactly.
it's not an abusive uh, uh, add-on that's going to hurt my customer and potentially lose me a customer. Um,
Exactly.
so it
Yep.
to me it I'm not an agent, but to me it seems like a no-brainer.
Yeah, and it's been pretty successful for our side. So like our close right now is rate is about 40% of people that we talk to say yes, we want to move forward with this partnership. So like that conversion to sale for B2B partnering is pretty good for us right now, and it's gotten better as we better understand our target demographic, right, for going to market early days. And we've really heard from agencies too. Like they'll have people to call in and be like, I didn't realize insurance didn't cover this, or like my engine breaking down. So you have this overlap, and we've even heard things like interest from some reinsurance providers, especially on the loss ratio side, because there's correlations, and you see studies from like Amazon and some of these other delivery companies where if somebody starts to take care of their car proactively, there it leads to less accidents on the road. So there's an incentive from the reinsurance side and some of that to affect loss ratio protection. So it's kind of like a win-win on multiple sides.
All right, all right. So the type of agencies that you're looking to partner with.
Yep.
So
Yeah.
so
So yeah, yeah, I can tell you more about that. So typically, we want to have somebody that's going to be having at least five producers that are on the team and writing. And from that side, also, we want somebody that's tech forward and willing to have something that they're willing to add this to their talent track, right? So, like, you have some people that are looking to build their book of business, where others are looking to sustain. We tend to be more on the side of someone that's looking to build and grow their book of business because they're more engaged, right, on finding these new solutions. We have found that like the kind of like the Midwest is kind of like the first early adopters that have like an interesting talk because they're able to talk to it about household lift. If you're able to see a household lift of 20 or 30%, it kind of resonates there as well. Yeah. Our typical like end customer for passing through is going to be standard auto. So typically, like if someone's just looking for bare minimum coverage, they're not interested on an add-on that's going to be there. The typical target customer that converts is a married male between the ages of 22 to 55. relying on their car, making over $70,000 a year.
Right. So the agencies that are focused on that middle market customer,
Yeah.
uh, and are looking to grow and are tech forward. How good does their tech need to be able to integrate?
Yeah, so there's two ways that we do it, right? There's one where like we can actually do the tech solution. So we can basically do something called an iframe and put it directly into their site if they want to just host it. Otherwise, we can actually just automatically co-market, book, and bind. So like as long as we can attach to like their email list, we can basically set them up on an automated email drip. So every time they close like a PNC policy, it just automatically goes out as an email. And that can be from anyone of any size. And that's just kind of like a referral link that gets tracked that way. Yeah.
All right. So according to LinkedIn, you're showing a little bit less than a year. So in a little bit
Yeah.
less than a year, you built the product and are actively
Yeah.
in production.
We've just actually closed over $14 million of business in over the last 5 months. So yeah, been a wild ride, and then we were just recognized by Plug and Play out in California for their Insurtech, for their batch of being one of the top Insurtechs in the country too.
Congratulations.
Yeah, it's a fun process. Yeah. Never
Fantastic.
thought I'd say that about auto warranties as a kid. Yeah.
Yeah, no kidding.
Yeah.
All right. So I always ask what the client's saying. In this case, what I mean is the agents.
Mhm.
It's early yet, but yeah, what are the agents saying from the results that they're seeing from partnering with you?
Yeah, so the first part that like I'll say is like I'll say the reaction that we get when we first bring the product to somebody, and then I'll say like what it looks like on the back end. So on the front end, it's like, yeah, I really haven't seen this before, or like this makes total sense. And you kind of have this like light bulb moment that goes in because they're like, you see someone, oh yeah, I'm kind of like already on this talk track already, right? And it's like kind of like whole vehicle. It's just like we cover what doesn't, like it fits in pretty smoothly. On the back end, we've seen like pretty healthy reflection because our commission share off of that is 20%. So it's a meaningful for them too, right? To build their book of business. And it's a rev share model. So for them on the back end, that rev share is pretty effortless, and it just builds. I think where the opportunity lies is like as we get larger with some of these carriers is like white labeling the solution, to where it becomes really interesting when you get in towards like retention for adding another line of business, for bundling, those type of things.
It's interesting that it hadn't been done before.
Yeah.
On the white label to the carrier, right? HSB has been white labeling equipment breakdown for, I don't know, a century, like
Yeah.
decades. Why wasn't anybody doing it on the warranty?
Yeah. So, I mean, there's two sides, right? Or I guess like, how much do you know about the history of warranty?
Not at all.
Nothing. Yeah.
Yes.
So, I mean, this whole industry was created from dealerships and manufacturers. It was never created as an insurance product, right? So that's one of the first fundamental premises. The other one is when you look back reflectively, you look at companies like US Fidelis, if you're aware of them. So back in, I think it was 2009, the auto warranty industry made up 17% of FTC complaints. So there's a very strong reason for why insurance companies are very protective about their image and their relationships, right?
Yes, it is.
Yeah. So that's the one side. The other side is when you look back towards 2016, you have companies. I think the stat was 24% of incumbents actually went out of business since 2016. And the reason is they couldn't actually, and because the policy goes to the TPA that administers, and they actually can't protect their loss ratios, right? And that's because they have these heavy inflation years, right? They have these big problems with labor costs going up.
They're not regulated on how they reserve.
Exactly. Exactly. And that causes a lot of fundamental issues. So like when you don't have a strong NPS score and then you also have unit economics concerns, the carriers get a little bit more shaky about it. And that's why like with us, rather than doing these 3, 5, or 7 year contract terms, we do an annual basis that's cost adjusted. So you protect that loss ratio, right? From year over year, just like people are used to the rate adjustments. The last part is like we have some different things that we do with underwriting as well that helps preserve that better.
Okay. So if I'm a carrier, and especially an auto heavy carrier, right? I'm
Yeah,
thinking progressive. Progressive is gigantic, but
yeah, massive.
whatever auto heavy carrier that is, and when I say auto heavy carrier, of course I quickly think of non-standard. So if I'm an auto heavy,
Hmm.
we're focused on middle market standard
Yep,
auto. Uh, and I don't have a solution like this, and probably my leadership has been afraid of it because of the things that you pointed out.
yep.
Why is now the time, and why are you guys the one that we should be talking with?
Yeah, so it's actually interesting. So when you look at someone like Progressive or Geico, they're actually they're kind of powerhouses within their own right, right? They're actually more tech forward in many facilities as well, but they've actually tested MBIs for Geico as well as breakdown protection for Progressive. But they use something for, I'm not going to mention the competitors, but they use third-party redirects, right? So what that means is it takes them out of the client checkout experience, and it's not a seamless flow. And that whole part of owning the customer experience is really impactful for conversions. Whereas we have everything that we do that's API based, which is a very different integration process. So if they're already doing checkout and you know the vehicle that's there, you know the mileage that's there, the customer's name, right? You already have that. We require no other information, and we're 100% embedded in that process, which no one else has been able to do before because they have never built that integration system.
Yeah, so Geico and Progressive have tested it with
Yeah,
third-party vendors that couldn't quite white label it, and
exactly.
it made
Yeah.
the checkout clunky.
Yeah, it makes it clunky. Yeah, it's just like not a good integration process. And then the other like this is a like slightly backtrack on the industry in general. I mean, you have companies like CarShield and CarChecks, like they're also massive providers that are they're just brokers. So all they do is sell. But even as of like July 31st this year, they just got another $10 million fine by the FTC for deceptive sales practices, right? So you have this like kind of like weary part because sometimes you'll have like 3 brokers and what goes through insurance channels or try to sell through insurance channels rather than the value going to the customer itself, right? So they're still standoffish because no one's done this kind of like full stack uh, providing in this way. Yeah.
Hey, so and it sounds like you have found great interest on the agent and broker side.
Mhm.
On the carrier side, are they starting to be interested?
Yeah, so we have 2 carriers that we're actively going through. Can't mention like who
Yeah.
those are exactly, but yeah, we're lined up for pilot programs with them right now. It's really exciting because we've even gotten like inbound from some traditional players in the market, and they're like, "Yeah, we only have third party redirect solutions. We want you in traditional distribution as well." And it's nice when you have inbound versus outbound as well early on. But yeah.
All right. Um, we talked about integration, APIs. Normally, I'm asking about pricing. We talked about the pricing being
Yeah.
more actuarially fair. Um,
Yep.
is there any cost to either brokers or so to the brokerage or to the carrier? Is there any cost to sign up, or is it just the
So,
integration?
no cost to sign up. That's there. If you want to white label the solution, that's something else where we kind of have to talk like what that means
Mhm.
because it depends on the scope of the business. But yeah, there's no cost to them.
Okay. So what is in the development pipeline, so to speak? What's in the future of FAIR that you can already speak about?
Yeah, so we started off with hybrid and petrols. So going for 10 years, 150,000 miles. We're now starting the expansion out to 12 years, 200,000 miles. Start of the next year, we'll be moving into EVs, but which is its own sector with huge consumer demand. It's actually really crazy because you'll see dealers sell like EV warranties for like $7,000.
But those batteries are stupidly expensive.
Well, the batteries are stupidly expensive, but it's like so. I also used to work with EVs as well, and like you don't measure them by miles; you measure it by up and on time and charge cycles and battery health versus. So it's a whole different underwriting premise that
Mhm.
no one really has gotten into. So we're starting there, and then next year we'll also be moving into power sports. So boats as well as motorcycles, RVs are all kind of within that same wheelhouse. Anything with a motor.
So EVs and power sports next year?
Yeah, we're on an aggressive growth path, as you can tell. Yeah,
Fantastic. And on those sides, is there currently I mean, warranties for EVs and power sports? So EVs, the dealerships do some.
yeah. There are some providers out there that are there, but like no one really understands the market really well, and it's because you don't have that long tail, right? So this year, from 2018, when Tesla's first started coming out, you see about 300,000 EVs are now outside of their warranty coverage for the battery.
Interesting.
Next year, you're going to have about 2 million. The year after, right, you're going to keep having this perpetual growth path of coverage. So there's a large market opportunity. And that's why you see the asset value of these cars also nosedive after that warranty, is the consumer perception fear. So creating something that's a warranty product there, we think actually can actually improve the asset value as well.
Yeah, that makes perfect sense. Awesome.
Yeah.
Will, thank you
Yeah.
so much for your time. Definitely learned a ton about the warranty side.
Yeah.
Uh,
Anytime.
which I I'm still I love uh it all came from obsessively reading 10Ks. Um,
Yeah. Uh,
fantastic. So for the listeners, if you run a brokerage or a carrier and this sounds like something you should consider, I will tag your LinkedIn and the company on LinkedIn when this goes out. And thank you very much for your time.
Yeah, really appreciate it, Tony. And yeah, if I can ever do anything for anyone that's listening to, if they're just curious and want to know more about the space or just want to learn, I'm just happy to educate and support any way that I can. Yeah,
Thank you.
thank you.